Welcome to this explainer. Okay, picture this. You're watching the market swing wildly. Your heart rate is spiking, and you're just sitting there, totally paralyzed, while a completely perfect trade passes you right by. If that sounds familiar, you are in exactly the right place. Today, we're going to take that panic, that chaos of volatile market sweeps, and we're going to transform it into a precise, common, executable checklist. We're breaking down the exact mechanics of the liquidity sweep reversal so you can turn all that noise into a repeatable system.
So why do you freeze? Look, we've literally all been there. You see a sweep happening right on your chart, price breaks below a swing low, you watch the stops trigger, and then price just snaps aggressively back up. You know exactly what just happened. It's a classic liquidity sweep, but you completely freeze. It's that deer in the headlights moment, just, with a lot more red candles. You're second guessing where to enter, you have no clue where your stop loss should actually go, and your target, a total mystery. And by the time you finally figure the whole shebang out and feel ready, the move is over. You've completely missed it just because of hesitation.
Well, here's our roadmap for today to fix that. We're going to cover the liquidity sweep trap, the 3 pillars of a sweep, the 7-step trade setup, when the setup fails, and finally, the checklist mindset. Let's dive right in.
Section 1. The Liquidity Sweep Trap.
We are trading the reversal after a sweep, not the sweep itself. This right here, this is the absolute critical distinction between what amateurs do when they panic and the golden rule that professionals just mechanically follow. Amateurs see a sweep happening and they react entirely on emotion. Professionals see it and they just calmly start running their system. Traders who try to enter during the sweep, meaning they're buying into a falling price because they just hope it's about to reverse, are literally just guessing. They're gambling. The sweep is just the setup, guys. The confirmation after the sweep is your true signal. Just hammering this one distinction into your trading plan is going to save you from the vast majority of bad entries.
Section 2. 3 pillars of a sweep.
All right, let's look at how this builds our foundational theory. You see, a liquidity sweep isn't just some random price spike. It actually creates 3 specific events simultaneously. First, it creates a new low. This is absolutely vital because that exact low becomes your hard stop-loss reference point. Second, it triggers a volume event. We'll dig into this in a second, but basically volume tells you if the move was just mechanical stop-losses firing off or if it was real heavy conviction selling. And third, it creates an imbalance or a fair value gap. Because price moves so ridiculously fast to grab that liquidity, it skips over levels, leaving a gap that price will usually return to. It's kind of like a 3-legged stool. You need all 3. Missing even one means you're trading on incomplete information.
Section 3. The 7-step trade setup. Okay, let's get tactical. I want you to shift your mindset here. Take a breath, slow down. This isn't about rushing. This is all about calm, calculated execution. We're starting with the prep phase, steps 1 through 3. Step 1. Identify the liquidity pool before it gets swept. You can't trade this reactively. Mark every obvious, glaring swing low, the ones everyone can see. That's where the retail stops are clustered. Step 2. Confirm the sweep with volume the moment it happens. Step 3. Watch for the reclaim. Remember, at this early stage, your only job is to observe. Don't touch that buy button yet. Honestly, the volume filter in Step 2 is probably the most critical piece of the whole puzzle. If price breaks below your marked swing low on relatively low volume, that is a high probability sweep. It just means stop losses are triggering automatically, but real sellers aren't piling in. It's purely mechanical. But contrast that with high volume. If that break happens on a massive volume bar, that's genuine selling conviction. Real money is shorting. That is a huge screaming caution signal because price is highly likely to just keep tanking.
Then we have Step 3, the reclaim. After the sweep happens, price needs to close back above that swept level. This is non-negotiable. A close back above tells you the market just dipped down, collected the liquidity, found zero continuation, and buyers immediately stepped right back in. And speed matters here for sure. A fast close back above that level, usually within 1 to 3 candles, is a massively strong signal. It tells you the collection is done and the reversal is officially on.
All right, now we're moving into the actual execution phases, steps 4 through 7. Step 4 is nailing down your entry zone. Once that reclaim happens, look for the order block, which is that consolidation zone right before the sweep launched, and the fair value gap we talked about earlier. If both of those line up at the same price level, boom, that is your highest quality entry zone. You wait for price to pull back right into it, then step 5 is waiting for the trigger candle. Step 6 is placing your stop, and step 7 is setting your target. Let's break these down a bit more.
Let's zoom in on Step 5, the trigger candle.
Price is pulled back into your zone. But again, you don't just buy blindly. You wait for a specific trigger, like a bullish engulfing candle, or a candle with a really long lower wick that closes back inside the zone. But here is the absolute most important part. You must wait for the candle to definitively close. Seriously, an open candle can look like a totally perfect trigger, and then, bam, it completely reverses in the final 10 seconds. You enter on the close. Never before.
Step 6. The stop loss. The rule here is firm, guys. The absolute hard invalidation point is always the sweep low. It doesn't go just below the entry zone. It doesn't go below the order block. It goes below the lowest absolute point of that entire sweep candle wick. Why? Because if price wanders back down to that low and actually closes below it again, well, it wasn't a sweep after all. It was just the start of a real breakdown, and your entire trade idea is officially invalidated.
And finally, step 7. Setting your target. This just comes down to simple math. You need a 2-to-1 minimum risk reward. Your target should always be the very next significant liquidity pool, like an obvious swing high. So if your risk, the distance from your entry down to your hard stop, is say 20 points, your target has to be at least 40 points away. If the chart isn't giving you that minimum 2-to-1, you either shrink your position size, or honestly, you just skip the trade altogether. Section 4. When the setup fails.
Look, knowing how to get into a trade is really only half the battle. Knowing exactly when a setup is trash is what actually protects your capital long-term. Here are 4 specific conditions that instantly invalidate the setup. You gotta have these as a mental checklist. 1. The reclaim takes way too long. If price hangs out below the swept level for more than 5 candles, the selling has been accepted. Walk away. 2. Sweep volume is too high. Genuine selling conviction won't just reverse. 3. The entry zone gets smashed. If price just slices straight through your order block without any trigger forming, it's done. 4. The trigger candle closes weakly, barely above its midpoint. If you see literally any of these 4 things, abort. Don't even try it.
Section 5. The checklist mindset. To actually pull this off in real time without freezing, you need a total psychological shift. Remember this, the checklist is the edge, not the individual trade. You have got to stop hunting for the perfect textbook sweep. The cleanest reclaim and the prettiest trigger candle almost never happen at the exact same time. Traders who wait for absolute perfection end up missing out on everything. The people who actually build a solid track record are the ones who mechanically execute this checklist day in and day out, even when the setup looks a little messy, as long as it meets those 7 criteria. The checklist itself is your superpower.
So, I want to leave you with this final thought, and really be honest with yourself. Which step in this sequence is the hardest for you to execute in real time? Is it having the patience to sit on your hands and identify the zones beforehand? Is it waiting for that trigger candle to officially finally close? Or is it accepting that hard stop loss at the sweep low? Figuring out your own pain points is step 1 to mastering this whole system. Memorize the 7 steps, trust your checklist, and just stay disciplined. Thanks so much for hanging out with me on this explainer, and keep learning.